Now for a look at the stock movers this morning. Jenny Horne is with us, host of Next Gen Investing. We'll start with CrowdStrike, and we are seeing this name under a little bit of pressure after its report. What are they saying?
So we are seeing a bit more of a mixed picture from CrowdStrike. I do also want to note this name was trading over 120 times its forward earnings into this report. So this has been a amazing, momentous comeback from lows. We've rallied 143% from levels touched really following that massive outage of $200 a share roughly, now closing yesterday at just around $488 a share. So it has been such a phenomenal name to watch, new high after new high. So I think that with that high bar set, it was a very difficult quarter to be able to outperform, just again, given the outsized expectations. So there was still definitely things to like. I mean, we saw about a 7% drop this morning after the company swung to a loss in its latest quarter, as well as posting a lower than expected outlook. So the company did report that loss of around $110 million or 44 cents a share, compared to around a 17% share or 17 cent per share profit a year ago. In the current fiscal second quarter, they're expecting now to see 1.14 to 1.15 billion in revenue. That was below consensus slightly, but would still actually mark a record. So albeit still definitely below expectations, but very modestly. And also did say the cost of the widespread outage from July is still continuing to weigh on their overall results, and that revenue is being hurt by an incentive program they launched to retain those customers after the outage. So I think this makes sense. I mean, we talked about the millions and millions of dollars that was expected from this company to pay names like Delta Airlines, for example, as well as offering a lot of these various programs to ensure that they did not lose their massive enterprise customers. And previewing this name yesterday, we were saying, hey, like maybe it's just a good read on the stickiness of the enterprise customer, where they're not necessarily fleeing their CrowdStrike contract as a result of one day of a pretty massive outage. But obviously there's ripple effects, and that's that CrowdStrike paid to keep these customers, and we're seeing that come to fruition somewhat more in these results than we've seen in quite some time. I will also say that they did mention their business has stabilized overall in the coming months since, and I think stabilizing is even underplaying it because we have been in such a consistent uptrend in this name. So I think maybe a healthy pause on this rally. Again, we touched new all-time highs the last two sessions, and I've seen really strong conviction still from the street. A lot of analysts, while maintaining their conviction, have actually raised their price targets. So analysts today would not indicate that there was anything to be concerned about within this report.
I mean, it certainly has had an incredible run up since the 200 level that it saw last August after the IT outage, the global IT outage. Incredible run up to 491 just recently. So a pullback seems to be okay for folks. I think they'd be willing to take a bit of a pullback after that incredible run, but nobody wants to see their stock go down, right? You did talk about how the analysts were feeling, and I saw at least one analyst report talked about how competitive CrowdStrike really is in the space. So the competitive position long term, they felt very confident. That was Jefferies. What else were you seeing?
And I will say I saw nothing but that confidence echoed from pretty much every note I saw this morning. So many still feel, Jefferies, saying they still feel very confident in their competitive position. Also, we're seeing several other analysts that are again, raising their price targets to still definitely optimistic levels, as we did see Oppenheimer raise its price target to 520. We saw Roth also raise their price target to 420. Well, Rosenblatt maintained their $515 price target, but obviously would imply new all-time high. So a lot of these price targets do still imply this mass optimism. And again, it's trading as if we're going to see that. So you'd hope. I mean, there's 53 analysts that cover this name. And right now there are about 13 that do have a hold or a more bearish skew to their conviction. But there's still, I mean, at this point, 40 buys in CrowdStrike. And again, with that forward PE, that's around 130 times as of at least right now, the forward-looking projection. So there is the expectation for growth still, and the street has not changed their conviction as a result. And also, we have seen some muted reactions from cybersecurity. Palo Alto Networks was one, traded down almost 7% following its quarterly update. So not entirely unprecedented in the space.
And then, thank you for all of that. So we'll continue to watch all of the cybersecurity names today. And then we turn our attention over to Apple, which has this incredible ecosystem of everything it does, and the Apple Store as well. But now some pressure too on it lately. So some downgrades, right?
Some downgrades and also slipping and giving the throne of the most valuable company to, I believe it's Nvidia, and as of recently. So I'll check that. But Needham did downgrade Apple shares to hold from buy, not giving a price target, saying their reduced estimates are really as a result of threats to Apple's near-term revenue and earnings growth. Every big tech competitor right now wants to take Apple's 15 to 30% platform tax and generate various AI innovations that open up the door for new hardwares that right now they're highlighting as potential growth. But right now trading at a forward 2026 PE ratio of over 26 times, which does look expensive on several metrics. They also do believe the stock right now, for things to work at these current levels, they need a major catalyst on the iPhone replacement cycle, which they do not see in the coming year. Until then, they believe the 170 to 180 share range is a better entry point. They also do say if Apple did decide to aggressively pursue its advertising revenue stream, it could materially accelerate their revenue and earnings growth. So they prefer right now competitors like an Alphabet and Amazon. And then despite right now Apple's premium valuation, they are among the slowest growth stories in their coverage between margins and revenue. So the super cycle that never failed to really come to fruition is, I think, what has unfortunately plagued a lot of the narrative as of late. But we do get some updates this summer, which I know that that's more midterm, but on what the iPhone 17, I believe, is what we can anticipate it to be called, what that will look like, what finally updates we can expect from Siri, and more about AI, which only bode well for a name like Apple, which again has such a vast and expansive ecosystem.
Yeah, and I looked. Apple's just above 3 trillion. Nvidia's 3.4 trillion, and I'm sure Microsoft's right around there somewhere, but I don't have that handy. Jenny Horne, great to see you. Thank you so much.